Well, let's take a look at the price of crude oil on this Friday, October 8th. And you can see that prices of crude oil were getting pretty close to $80, $79.56. Brent crude oil over the hump of $80, currently at around $82.54. And obviously, this is something that's becoming a pain point for all Americans, as there's some worry that rising prices, if they do persist through the winter, could really pinch Americans' wallets. So let's bring in Robert Sinclair. He is the AAA Northeast Senior Manager who's watching this space very closely. And Robert, I guess just to kind of kick things off, obviously the big major concern for Americans is, especially as the travel season comes up for the holidays, that prices of $3 or more at the pump is really going to hurt their wallet. What are you seeing on that front? Are Americans really starting to get concerned about these rising prices?
Oh, I think they've been concerned for a while. In fact, back in March of 2018, we asked drivers what the pain point at the pump would be, and 40% said $3 a gallon. We hit that price on May 12th this year. And in fact, in 2019, the last quote unquote normal year, we saw a peak of prices in early May, and prices went steadily down for the end of the year, and that's the normal trend. But right now, as you pointed out, we're at $3.26 per gallon. That's the highest price of the year, and it's 7 cents more than just a week ago. And it looks like this pain is going to continue.
Robert, how high do you think prices could potentially climb here over the next couple of months?
Ooh, I don't like making predictions because gasoline and oil is a very fickle market. Things can change very quickly, but it looks like $3.30 a gallon is a foregone conclusion, especially given the discipline that we're seeing as far as OPEC Plus is doing with crude oil prices and limiting the per day, per barrel output increase that they settled on this past summer, 400,000 per day. Earlier this week, they decided to keep that increase at the levels that they are. And so it looks like this is going to continue as far as the high price of crude oil and with it, the higher price of gasoline.
Robert, can you give us a sense of how that relates traditionally to previous years? Obviously, pandemics are not something that have been seen in the data before, but there are seasonality factors to the price of oil, generally kind of bottoming in December or January, right? So is that what you expect to see headed into the colder months, or you actually expect to see the opposite because of other factors at play here in 2021?
Oh, it'll absolutely be the opposite, particularly given what we've seen in natural gas this week with the price going up 10% and highest price since 2008. And WTI, West Texas Intermediate crude oil, flirted with $80 a barrel. First time we're seeing that price since 2014. It's anticipated that we might have a cold winter in North America, and a lot of power generating companies are talking about switching over from natural gas to diesel or crude oil to power their plants, given the high price of natural gas. All of that is going to put upward pressure on the price of crude oil and with it, the price of gasoline. Traditionally, we see gasoline bottom out in December or January, and the prices start to rise in March as we start to make that switch over to summer blends of gasoline. Prices peak sometime May, June, July, or August, and then start going down again to bottom out in December or January. We are bucking that trend this year, and it's really, I think, creating a lot of pain for a lot of drivers across the country. And look at what's happening in California with the average price over $4.30 per gallon, and some stations charging $5 a gallon. It's really tough out there.
It is very, very tough. And Robert, we were hearing the Biden administration talking about this when they were asked about the higher energy prices. They responded with the fact that all tools in the toolbox are under consideration in order to combat the higher prices. I guess from your perspective, what would make a meaningful dent in the high energy prices right now?
Well, what the administration can do and what it has talked about is selling oil out of the Strategic Petroleum Reserve. That would tend to put some pressure on the foreign producers. And in fact, it could really be a kind of a bargain because they could sell that oil now in order to put more oil in the market and put pressure on those foreign producers to put out more oil and then rebuy that oil in the future when undoubtedly it'll probably be cheaper. That's generally the main thing that the administration can do. They can engage in diplomacy. perhaps appealing to the foreign producers to pump out more crude oil. But they would do that on their own once it gets to the point where there might be demand destruction because of prices being so high. And that certainly could happen. And in fact, demand will probably never return to what we saw pre-pandemic, given the fact that there's so much hybrid work going on these days with people working from home and traveling to the office, but far less than they were before. And also, we've got a pretty old fleet as far as the vehicles on the road are concerned, average of 12 years old. Once that fleet starts getting younger, the mileage will get better, and we won't have nearly the demand that we have. And in fact, the Oil Price Information Service survey of gasoline stations says that we're about 13% below where we were this same time in 2019, the last quote-unquote normal year.
Robert, I want to ask about the global perspective here, because what's interesting is that we've seen in the United Kingdom already those queues outside of those petrol stations. So this is a global story as well. What are you gleaning from that? Is it the same factors at play in the United States as will be in the UK, as might be in other countries as well?
Yeah, it's those interruptions in supply chains that we're seeing globally in our country, mainly due to the absence of truck drivers, especially gasoline truck drivers. A lot were laid off during the pandemic. They found other jobs, perhaps for package delivery services, and they are not coming back. So that's going to be a problem. That's going to affect some stations, probably most likely out west, on into next year. The schools that train these truck drivers, and it's a very specialized training, many of them have closed. So that's going to be a problem that we're seeing going forward. When you go into a station and there might be a pump or two that's covered up with a plastic bag because they don't have the fuel in the tanks down in the ground because the truck drivers are just not there. There's plenty of trucks. There's no one to drive them. That's the main reason we saw all these queues at gasoline stations in Britain in the last couple of weeks. We don't think it'll get that bad here, but it could lead to higher prices and some pumps at some stations being dry, as they say.
All right. Supply chain. Robert Sinclair, AAA Northeast Senior Manager of Public Affairs. Thanks for hopping on Yahoo Finance this afternoon.